Hi. I think when the CPI drop happened. I mean that was pretty significant um, to the downside. But I think after that, there kind of I think was this assumption that was just going to continue. That we were just going to sell off all week. That you see a lot of charts on Twitter comparing this to .com bubble or Tesla's the next Enron, that kind of, it really didn't quite materialize that way. So what a lot of stocks ended up giving back, at least initially in the week, was just that most recent rally. Like they just sort of pulled way back from that, and then are kind of at a point of indecision, I think. And you even saw some continue to rally and push back. Roblox went back up, and then it dropped it all on Friday. So I think that even though it's volatile and the moves are pretty steep at times, it still kind of counts as sideways to me. That the market still hasn't. Most stocks have not tried to test those June lows. So we're still at a point where I think that could happen, but it might not. And you see, like you saw Friday, that these little intraday rallies can be pretty violent too. And so really it's kind of about finding a stock at a level that you trust and then waiting for a bounce. That's kind of where I'm at. And that's what I did with Boeing on Friday. I just kind of casually mentioned it to you at that 142, 144 level, and it did end up bouncing from there. So those are the kind of setups I'm looking for. Some of my setups I've been doing have kind of broken down, and I'm just going to wait and see. Bob is a good example of that, and I'm sure we'll get to those Chinese ADRs. But that's my kind of initial impression of the week.
Yeah, the CPI definitely. I seen more of the sell off on Tuesdays last week than
Yeah,
Friday. Friday just seemed like continuation of it. Um, a lot of like levels broke on charts. Because I wasn't watching charts Friday. I didn't see them until I got back, and just a lot of levels just ripped straight through. Um, so I definitely think the market reacted to that, and with the rate hike coming in, um, that's probably the levels we're testing in most cases, right? We're testing downside or psychological levels, the next one down. Um,
yeah,
but the the lows from May, June, July, if you're Chinese or a couple other sectors, it might have been February, March. But testing those lows is still not like in play in most cases. We're still like going through the 2 weeks ago rally or the August rally. Like we're still in that channel on like 95% of things. Um, I personally think the hit, because if you watch any like news outlet right now, like they're just saying the market has 20% downside. Um, it's coming out of like Apple and I would think Tesla and Microsoft and Amazon, which those didn't really have that drastic low in
yeah.
those months earlier. Um, so like for me right now, it was very interesting coming home and seeing all these levels just torn apart on Friday on a lot of different things, with some pretty vicious candles in the first hour or two. It looked like in most cases. Um, but in the reality of things, do you remember the crescendo? I think it was in like February. You remember
Yeah,
that? Like
yeah.
we're not gonna get that kind of downward movement. The moves here now are 5 or 10%. Like they're not 25% in a week anymore in most cases, in my opinion, without a catalyst, just on market conditions. So
Yeah, and one of the ways that you see like a lot of traders are they get frustrated with this, that the biggest move down sometimes is actually that pre-market gap down,
yeah,
right?
yeah,
And then so like um, QQQ on Friday, I think was down like 1.3, 1.4%. pre-market, it ended up going down to like 1.9%, but it sort of zigzagged its way down and then, rallied at the end of the day. So if you have some bearish thesis, you're right. But if you weren't in it the day before and you're just trying to scalp that, it's, there isn't much there. So you have to be kind of mindful of that too, that a lot of these drops happen then. So unless you're swinging puts, it can be pretty dicey to try to chase puts, especially at open, because a lot of these things will, they just take, I mean, they're selling off, but they just take a breather. Nothing's going to go straight down. So
Yeah, and
that's like,
I think we should establish like there's different charts. Like if you just look at like a Facebook, the Meta, right? Like it's testing COVID lows, not June or July lows are irrelevant to Facebook. There was it was just the channel it was trading in already. It dropped way earlier in the year, like when Netflix dropped. Um, but at this point in time, it's testing like something way back, and that's not the stuff you want to be in. You want to be in, and I know we don't want to talk a lot about charts, but like a Roblox is a better looking chart because it has a significant area below it that it has basically support on. Like, so you can trade off of that. Where like Apple's another good one. There's just a lot of big names that can take market and market sentiment down, but when that brings playable stocks into a channel or a level of support, that's where the money's going to be made. Not trying to chase those other names or the ones that still have a lot of room down, because that if we are going to, the point of that is if we are going to go down more, the 10 to 20% they're talking, it has to come out of those bigger names.
yeah, exactly. Because I mean, Apple on that last rally got within, I think, 9% of all-time highs, and which, people buying calls up there, like it's not the conditions for Apple to go to all-time highs. But the point is that now gives it some room, that if the entire market's going to come down that extra 20% or something, you're right that those are the names that are going to do it. Tesla as well has shown a lot of strength lately.
Yeah,
Didn't even
yeah,
really drop that much on CPI, maybe like 3%,
yeah.
which is nothing compared to its peers. And then it got it right back. So Tesla has a lot of room down to like 250 or so, if if we do get some aggressive selling. But yeah, I mean, some of the growth names just don't really have that much
Yeah,
room to
like
the
let's say
downside.
like SoFi ain't going to 3. Like that's not
Yeah,
how the
exactly.
market's
Yeah,
losing 5%. That's not
right.
that's not it
Yeah,
anymore. um,
right.
while we're on the Apple one, because looking at that chart, that's a great example of a chart that has a lot to give back. And even dropping to like 100 from 150, how much of the market do you think that takes away? Because Apple's a big part of the market, right? It's like the biggest piece of the market, right?
Yeah, I mean
That's a third.
that would send QQQ probably below the June lows, just because Apple's such a huge percentage of it.
Do you think it takes
And
like a 6% out of the total market?
yeah, I think
Okay.
so.
So see that, and
Yeah.
that's my point. Like if we have 20% more to give, those big names are the ones where it's going to come from because they have not only the most to give, but they're the biggest percentage to give, and everything else is pretty pretty much given their tax already. Like Netflix, that's a good example because it's coming out of it. It's just resilient right now because it has good news. But like that's not going to go down to $100. It's just not. Yeah, that's not happening. Did I lose you, P? So
Yeah.
yeah, I mean, so overall, like I think that's gonna like obviously make SPY important. So where are you at on that this week?
All right. Let me Let me call up my levels here.
I got 430 and 370. I don't like looking at this chart, but I kind of have to for the room. But we're dead
Yeah.
center. We're dead center of that right now. I think we're going to test 370, especially with my. I think the Monday, Tuesday this week are going to continue to be like Friday. Um, Low volume, and the shorts are going to try to play the interest rates. That's just kind of how.
Yes,
That's how
and
I see next week going.
I think it's definitely more important than ever to pay attention to those pre-market highs and pre-market lows, and if SPY gaps down overnight, um, puts at the bell, like you might be able to get something out of that, but it tends to bounce back pretty quickly, and so that like that first 30 minutes. Well, actually, if you go back to Friday, it's kind of a good example of this.
That's a great
So
example.
on Friday we had, and it was also the dividend day for SPY, so it was a little bit of a flush there. But anyway, so we gap down in the morning from about 387 to like 384, and then it went down to like 382.50 for about a minute, and then bounced back up to 385. So anyone trying puts it open, like yeah, you could scrape a little bit there, but I mean, look at the way those candles come back. And this really isn't any kind of major rally or anything like that, but this is just sort of its normal intraday rhythm. So you're better off to wait till that 3 minute, 5 minute RSI or whatever is pretty high, up around 70, and then you can try puts from there. Um, because yeah, we're in like a bearish thesis, but it's really easy to have a bad entry on something like SPY, or people have been playing SPX as well. You just have to be very careful about that, because these you don't want to try to hope your way through one of these little rallies, because sometimes it just doesn't end up giving it all back.
Yeah, just looking at SPY. I'm playing pre-market low in the downtrend, and I'm buying calls off of it, not puts.
Exactly. Yeah.
And then when it just, I mean, if it gives it up, you obviously don't buy calls. But if it's respecting pre-market low, like you had 5, 10, 15, 20, 25 minutes, about an hour into market, off that level before like 385s would have went in the money. And then it came off that level three more times during the day, and 385s would have finished in the money. Um, so I mean, that's how I would play it always. If you get confirmation that it's going to hold the pre-market low in a downtrend, that's how I would play. You have to play kind of
Yeah.
against the grain because you're scalping. It just I don't know a
Yeah,
good
exactly.
analogy.
Yeah, so we had one day last week where if you were the pre-market low, that floor just collapsed, and it was the CPI day. So that is rare, and you need that actual um, catalyst driving that fear and that sell-off. Otherwise, you have to realize that about 70% of trading is algorithmic, um, which means that, I mean, obviously it's programmed by a person, but it's kind of looking for opportunities, and a lot of times those opportunities are against the grain. So it's about there's this record number of puts out there in the market. So scalping calls intraday with the algorithms, like that is a safer trade. It's that path of least resistance that
Yeah,
those
yeah.
programs look for. So I'm not saying like you have to think like a computer, but you have to be aware that those computers aren't responding in the same kind of emotional way that your everyday retail trader is. So yeah, conditions can be horrible. The world's burning down, but calls are still to play. It's kind of how it goes when you're scalping,
um,
and then the opposite's true in a bull market.
Definitely, definitely. Kind of switch gears a little bit here. I got another note on copper. I've seen it in the news again, and I don't know if I'm just hypersensitive to it now that you've mentioned it, but it seems
Yeah.
like there's a lot going on over there with the copper prices and whatnot, and how that's going on. And
Uh,
I don't follow it
yeah.
much, so
So, right. So basically, uh, copper is at a really crucial spot right here. And I'm not quite as up on what's moving the price as I am what the price movement means and how I see the flow respond to it. Um, Basically, if copper can't hold 350, and right now it keeps trying to, like it's at 351 right now.
what's that?
It's
Is there a
been
ticker for that you're looking at?
yeah, it's copper futures. It's HG1 exclamation point.
HG1 exclamation point. Oh, that's an A. All right. Thank you.
And so the trend basically is if copper loses 350, it's a disaster for X, CLF, FCX. FCX is an actual copper stock, but it impacts all of them, and then your aluminum as well. It's even more important than the actual um, aluminum futures, which are kind of lagging a bit. But yeah, look, for aluminum futures, it's 200. Like it needs to keep 200. And like when it got up into 210, 220, that's when you saw AA go on that big rally. So 200 is the number in aluminum, but copper is sort of the where the big story is. And so if this loses 350 and doesn't get it back right away, basic materials are going to all sell off, and you'll see like on X is a good example. X for me, the number right now, my line is 1981, but there's flow to take this down to
18.
what's that?
I have 1812.
Yeah, I was going to say 18p is in play, and that should hold. If it loses that, it's in some big trouble.
Rip.
Um, I
What?
would
You don't have flow underneath that, do you?
no, not
Yeah,
yet.
it'd be 13.
Yeah,
It's
exactly. That
nasty. It's nasty. Yeah.
right. Yeah. So and so this is where like copper would be like $3 or something if that were to happen. Like
Okay.
that's what would push X down there.
Okay.
So I'm looking for copper to hold this 350 level. Um, Worst case scenario to me, like if it gets into like the like 330s or 325, um, that would be kind of way oversold, and I would look for it to have a pretty significant bounce off that. So basically, what I'm saying is, I'm not that interested in the upside on steel right now because I think that copper might drop into the 330s. Once it gets there, that's where I start to look for calls and calls like a month out. I mean, you can scalp anything any day, but in terms of like a sustained uptrend, I think that copper is going to need to sell off a bit for us to get that momentum back. To carry us because it had tried that it on in like early last week it had claimed 350 and was heading up. CPI sort of killed it, and so now we're going to see where it wants to go from there. So I'm looking for that move into the 330s and a response, and then
I
I
got
think
you.
we'll get some clarity on it.
So that kind of explains a lot of other charts to me because the sector in general, yeah, it's kind of acting similar. So that makes a lot of sense now. We'll have to watch for a good catalyst on that.
Yeah, for sure. And it's I'm not sure if the government's going to give us one. I don't know that we have. I think we're most of the news is pushing EV to me is sort of a little bit hotter right now.
Yeah. Oh, definitely, definitely. No, no, maybe end of the year, even in first quarter next year type thing.
Yeah. Yeah.
Which would kind of be perfect on the calendar if you think about it.
And which, like, if you read the earnings reports on X and AA and CLF, like they're very solid companies,
Yes, yes,
and
yes.
they have good, they have good numbers. It's just purely inflation, supply chain,
Sure,
commodities
sure.
prices related. So they're not, you're not trading Upstart when you're trading X. So you just kind of know the situation.
Yeah, I just hope it's
And
a Christmas tradition every year. You telling us to buy metals, materials, and
yeah,
energy. That's all I'm saying. Like it kind of would line up great. Let these breathe the next 3 or 4 months, and
yeah, those last time we caught a nice move, and then it just like it went for another couple months after
yeah,
that.
yeah,
That was
yeah.
wild.
So, last topic here, pretty much is the interest rates. So kind of leading into like next week. Um, what do you see there? It's Wednesday, correct?
Yeah. So I see there's a lot of feeling like a lot of doom and gloom, worst case scenario stuff out there. So
Well, what would worst case scenario be? Like, isn't it? This is 3 quarters. We kind of know, right? Like, would worst case be one?
one, I think, yeah,
Okay.
because there's like a 20% chance that it's one.
Yeah.
So that means
I see
that
that.
like point like if it's 0.75, I wouldn't expect a really bad reaction to that. I mean, I think that that's sort of expected. So um, yeah, well, okay. So my take, like, probably what's going to happen is that you actually get a pump into the numbers, so that when the
Okay.
numbers come out, like, you definitely could get a sell off, but a sell off that doesn't really take us anywhere, and that's where the sideways thing comes in. So that's sort of my expectation, is to just be careful shorting before the event, and I think there'll be some opportunities to short after, and then that sell off is either going to take us right back where we were, or it's going to break down, and that's where that breakdown in the big names like Apple, Tesla, etc., would come into play.
I guess I'm counter to you. I think just because of the low volume lately, and we'll definitely get into it when we get into charts here. A lot of charts are under levels that getting back through those levels to pump. I just don't see it going into Wednesday. Like I really don't think Monday and Tuesday are they're gonna be sideways with that one or two runner. But the volume just it's not that the bulls aren't there. There's just not many people in the market. It feels like right now to really get stuff moving without good news. And even those plays like take 3 or 4 days. I mean, which is good for us because we're day traders, right? But like,
Yeah.
it's not getting like the $10 move in one day on the good news. Like Netflix is a good example right now. They've been trending up. That move wasn't one day everybody piling in. It's like slowly burnt up. End phase, same thing. Um, so I,
Well, right. Well, I don't think we're that far apart. So, like, I think one thing,
but
when I
I,
talk about a pump, I'm looking at it from an options perspective, which is a much smaller move, right?
yeah, yeah,
So I don't mean that QQQ is going to pump 3%. I mean that it might pump like 1.25% into the into the event, and then the event's like a 2% drop. So like
okay,
that,
okay,
I think that that's sort of kind of what I which is flat from a larger perspective, I guess.
yeah, and I see us I think the interest rates is the big pivot. I don't know how the market's going to react. I'm interested that you said the 1% would probably be a more negative reaction because I think most people just want to get this over with. So
Yeah.
the more, at least from the retail perspective, people that want to put their money back in the market just want to get it over with. Um, but I think everyone knows it's going to be 3 quarters. So when that happens, I think we rip after that. So I'm on the flat, but just down first and then back up. Um, Whether or not we get volume to go back through some of these key levels, that's the real, that's what we're waiting for right now, is for people to come back into the market. Um, yeah. So
Yeah,
yeah,
absolutely. And like for me, like for an individual stock like Tesla, that big fat 280 line, um, they got to test that again. And so to me, like when it does test, it could bounce and then it's going to rip higher to even where it is, from where it is now. And we could get like 330, 340, something like that. But it's just really just standing out to me, like in the flow as well. That now that, and then in some other stocks, now that they've broken down, that level just below where they were has got to get tested.
yeah, no, I totally agree with that. I agree with that. And and I mean, I think there'll be sectors and stuff that are not going to be affected by this report, but they are affected by the lack of volume and people in the market. So when that comes back, those I think will benefit the most.
Yeah, yeah.
All right, and with that, let's call that here and get into those kind of stocks in our other part.